Guys, I don't know if you are ready for this result. I'm completely surprised because this strategy in 1 year, okay, well, 1 year and a couple of months of 2026 has made moving averages exist since the 18th century when the Japanese started to track the price of the rice, and they used obviously moving averages to actually see the trend that the price of the rice had at that moment. And obviously it's not the moving averages that we see today, because today obviously we've got computers and we can see them quite clearly and automatically. They would have it all drawn by paper, all completely manually. And the funny thing is that we use the same formula today, hundreds of years later. And this is where I actually got curious, and I'm thinking, how is it possible that the same formula still works hundreds and hundreds of years after? So I wanted to test it with you in Forex Online to see how a unique trading strategy with only moving averages performs in the entire year of 2025. And before we dive straight in, right back down in the description you'll find a nice discount coupon so you can get Forex Online for a cheaper price. And we're going straight into the euro against the dollar. It's nothing to do with rice. And obviously we are going to add some indicators that are going to be the moving average. So we're just going to come to indicators and look for moving averages. So there we go, simple moving average. And the first moving average, I'm going to add it as a 24 period because we're waiting in 1 hour, and basically I want a moving average that tracks the last day of trading. So this first moving average is going to be green and it's going to be a 24 period. The second moving average that I'm going to use is the one that's going to track the last week. And to do this, it's so simple. It's just going into a calculator. So we're going to go 24 times 5 gives us 120. This is going to be a weekly moving average, so we can have the average of the last week. So what I'm going to do is I'm going to come to the indicators again and look for a moving average and add 120. This is going to go in yellow and we are going to apply. And then we've got our two basic moving averages. It's going to basically give us the entry when the average price of the day goes above of the average price of the weekly. I am going to buy, and vice versa, I'm going to sell. But now we need actual macro trend, and what we're going to do with this is going to add another moving average. And I know it sounds really stupidly simple, but it's really good. So now basically, how can I calculate this monthly? Well, I'll come back to the calculator, and in this case I'm going to add 24 times 20 days, okay, because normally we've got 20 days in the month that we're actually trading. So that gives us 480. So perfect. So let's add 480, and that way we've got the entire month tracked, we've got the week tracked, and we've got the last day tracked. So now we can actually see the actual macro trend that is obviously all virtually in a downtrend, and we can see that most of the time the daily stays below the weekly when we're actually in a strong trend, and then we can see the pullbacks and the reversals. Obviously here we can add loads of different variables and create loads of different strategies, but I want to keep it completely simple so everybody can understand it. And obviously I'm not going to look for a trade every single day. I'm going to look for a trade, let's say maybe once a week. Okay, so basically what I'm going to wait for is for the price obviously to be in our trend. So in this case we're in a downtrend, and I'm going to enter the market when the price comes into a pullback. So the daily moving average crosses the weekly moving average, and when it crosses back down below, let's say here, I'm going to be entering the sell. Okay, this is what I'm going to just rinse and repeat. And if we've got an uptrend, then obviously I'm going to do the same but buy. As well, what I'm going to do is I'm going to close the trade when the price obviously goes through my daily moving average, because obviously this is my hour. At the end of the day, the candle is an hour. So when it actually closes above my daily moving average, I'm going to leave the position if I'm in profit. If not, I'm just going to wait for the price to develop a bit more. And if my daily moving averages crosses my weekly moving average, then I'm going to close the position as well, because at the end of the day, the setup is completely invalid. So let's go forward and see what we can actually achieve, because I think it can be quite interesting. So okay, it's crossed above, so now just wait for it to price to cross back down. Okay, there we go. So the crossing will be here. So now we just add our sell position. In this case, I'm not going to use any stop loss or take profit because I'm going to close it manually when X or Y happens. So I'm just going to add one lot and let's enter the order. So Let's see how it performs. Okay, it hasn't actually closed above, so let's see. That nearly closed above there. Let's see if we can actually get some profits out. Okay, it's dropping. Okay, it's closed above. We are in a loss, but we're actually in break even. So this would depend on how we want to take it, because obviously I personally could close the position here because it's just a break even. I don't mind, and we could avoid actually the price going above, or we could just wait until we're completely in profit to leave. So let's just let it scroll just a bit more. Okay, perfect. That's something that we wanted to see, and let's see how it goes through. All right, so I'll be closing the position right here with a profit of $500, so that is quite good. Obviously, big disclaimer, this is not a perfect strategy. It's just something that I've actually popped out of my head, and we'll see the results at the end. But in any case, don't replicate any strategy you see in internet, because it probably won't work for you if you haven't backtested it and tried it yourself, because if you don't have the confidence, then you can't trade it live. So always backtest it before, otherwise the only thing you do is going to waste time and money. But let's continue and let's see if we get another entry, because now we'd have to wait for the, obviously, the moving average to cross the weekly moving average again and cross back down below for another sell. So let's see how it performs. So we can see it looks like it's going to go up. Okay, it's going up. Perfect. So there we've got our cross, so we just have to wait the price to cross again. And another thing that we can do in Forex Online is if we click on our moving average and we go to moving average crossing, we can see we've got 1 and 2. First one is obviously the nearest to the one that we've got, and the second one is the one that's more away from the one we've got. So this would be the yellow one and this would be the red one. So if I click on here, it will take me directly to the crossing of this moving average. So there we go, the price has just crossed it, but obviously it's not a valid setup for us because it's gone below the red moving average, so we just have to wait and continue. But just so you know that in Forex Online we can actually do these type of things. But now it actually is valid because it's completely crossed, and now the yellow is above the red and the green is above the red and the yellow. So now we could enter our second trade, and this would be a buy position. So let's see how this performs. So what I can do as well, if I can come to this one here and go to price touch, and that way we can save some time. Just now it hasn't closed below, okay, and that is important. Now it has, we are in profit, so we're going to leave with this small profit, making just a bit more than 100, and let's see if we get any more positions. But right now we're sitting on a 6.7%, so that is perfect. So let's see if we get any more positions. The price right now is going down and the moving averages are starting to go down as well. There we got our, we can call it the golden cross, because obviously the yellow moving average is below the red and the green is below both. So now we could enter our sell position, and you can see it's really simple trading strategy, but that doesn't mean it's actually a bad strategy. Okay, the price is just about to close above it. Half of the candle did close above, but we were not in profit, so we're going to wait just a bit more to see if we can actually get something out of it. Same happens here, crossing, it crossed above, but we're not in profit, so we're going to wait a bit more longer, and it looks like we might leave with the cross of this moving average. Perfect. So here we're leaving with minus $700. That is okay. Right now we're just sitting on minus 100, so not a problem at all. And let's see how it continues going, because just now we're getting some nice push up, and we'll just have to wait either for the green one to go above and get our new setup. It looks like it's going to do exactly what we thought it was going to do. Okay, now we could wait for our pullback right up again, and there we go. So now we're going to open our buy position, and let's see how this one performs. Okay, it's going to straight down, so that is not a good sign. But obviously when it crossed, we weren't in profit, so we just have to wait a bit more. Okay, it crossed up above again, and it seems like it could drop down, but obviously we've got to wait for the moving averages to cross down again. But maybe we could get some type of surprise. No, perfect. Our crossing will be here. So minus $200 here. That is completely fine. And I'm quite curious how this will finish out when we finish the complete year. I might do 2026 as well, because there's only a few months there. And let's see how it performs in the rest of the trade. And fuck me, look at this trade here. I mean, we're talking about we entered down here and we're sitting right now on $3,000 in profit. So it's taken our net profit to $2,700. Guys, I don't know if you are ready for this result. I'm completely surprised because this strategy in 1 year, okay, 1 year and a couple of months of 2026 has made $1,581. I mean, this is insane. We're talking about, in terms of percentage, that it made 145% in 1 year. Like, the result is completely overwhelming, and if we look at the profit factor, it made an 8.71. okay, we had a total of 29 trades. I must say that they are not a lot of trades for the amount of time that we've actually spent, but the result is completely incredible. And I mean, we just need to look at the equity chart, that it just goes up and up and up. Like, we only have this small drawdown here, this small drawdown here, and that's it. I mean, our max drawdown is sitting on $1,500, so this is a 15% of max drawdown to win 145%. I mean, it's completely out of the box and it makes no type of sense, but hey, it's great because I didn't know, honestly, it would give me this type of result. But hey, it's a complete surprise, and I might think of starting to use this type of strategies in terms of swing trading, create a trading robot and testing it out on demo, because it's given me an insane result and I did not expect it. I mean, if we come to analytics inside, the only thing that we could actually add onto it, and it would add a fair 60% on it, would be actually consider cautiously increasing the position size after winning streaks. So basically, when I make, let's say, 2 streaks in a row, 2 winning trades, I would double the position maybe until it falls off. If we click inside, we'll be able to see it in detail. It says here 2 times drop after 2 wins. So basically, I'll duplicate my position size, and then when I lose, I'll take it back to the original. And another thing that we could use, and it's quite intelligent to do it, is the exit optimizer, because right now we are not running any type of stop loss or take profit. And this obviously is great because we have full control of when we close it, but as well, we need to actually be constantly watching the market to actually do this. Obviously, when we do it in backtest, it's completely okay, because the backtest might take us 1 hour or an hour and a half, as we don't need to spend any more time. But when we're actually sat there every single day to take a trade, this could actually be an issue, and I would sacrifice a bit of profit to actually just have a set stop loss and a set take profit. And we can see that the risk reward is quite high, like 1 to 7, 1 to 6, and the max holding duration would be 3 days at max. So it's not a bad idea to get these type of strategies and put them through the exit optimizer, because we do sacrifice just a little bit of profit, but we would earn a lot of time, because once we get the trade, we don't have to follow it. We can just leave, set it and forget it. But now it's your turn. Go to Forex Online and try it out yourself. Try it on a different asset, try it on a different time frame, or even try it on a different year. See how it performs. And if you do test it out, please drop me a comment back below, because I'd love to hear your experience. And don't forget that down in the description you got a nice discount coupon, so you can get Forex Online for a cheaper price.